volatility is shifting inside a prior hourly range. The hourly boundary remains defined by session memory rather than fresh relocation. The February 18th New York session anchor formed precisely between the February 17th Asia session lower boundary and the February 17th New York session lower boundary. That placement matters. It did not form at extremes. It formed inside overlap. Price established that anchor below the 20 moving average on the 1-hour chart. Distance from the 20MA was not extreme, yet acceptance above it had not formed. The 120 moving average had already been engaged earlier on February 16th. That interaction led into a brief sideways redistribution. Then the 120MA and the 20MA began overlapping during February 17th. Overlap reduces directional clarity. Overlap increases compression weight. Despite temporary fluctuation, the broader hourly structure remains inside the February 11th New York session box. That box continues to define structural containment. Attempts to extend beyond it have lacked persistence. What appeared like expansion briefly pushed beyond the boundary as the 20 Bollinger Bands widened slightly. However, band expansion did not convert into sustained relocation. The width increased. Acceptance did not. The Asia session that followed formed directly at the February 11th New York lower boundary. That alignment reintroduced structural gravity. Instead of continuation downward, price rotated back upward into the February 18th New York session box. This return occurred while reclaiming the 20MA from below. Slope remains shallow. Distance remains limited. On the 1-hour time frame, the 20 Bollinger Bands attempted mild expansion, then began compressing again during the Asia session. Both upper and lower bands show contraction behavior. The 4 Bollinger Bands reflect similar narrowing. Short-term volatility is compressing inside prior hourly memory. Compression dominates. Movement exists, but relocation has not formed. The 120MA now sits slightly above price after minor disengagement. It was marginally pierced during earlier sessions, then re-engaged, and now remains just overhead. This creates layered friction. The 20MA below provides short-term dynamic reference. The 120MA above provides structural weight. Price is negotiating between them. RSI on the hourly chart has lifted from prior lower regime readings. Momentum is improving in speed, yet not accelerating into expansion. Slope is positive but moderate. Density remains controlled. This is not acceleration. It is recalibration. Inside the February 11th session memory, volatility is redistributing rather than relocating. The 1-hour structure defines containment. Engagement persists near overlapping averages. Acceptance has not yet extended beyond structural memory. Compression continues to define duration. The 15-minute chart is negotiating inside that hourly containment. Every movement on the lower time frame remains structurally dependent on the February 11th hourly box. The February 18th New York session anchor on 1H acts as the upper behavioral ceiling for 15-minute fluctuation. The February 17th Asia lower boundary remains the lower reference. Between these anchors, the 15-minute structure oscillates. Distance remains measured. Duration remains limited. Earlier during the session, the 15-minute chart showed gradual upward engagement from sub-67,000 levels toward the overlapping 20MA and 120MA zone visible on the hourly time frame. This movement occurred while the 4 Bollinger Bands began widening slightly. Short-term expansion was visible. However, the 20 Bollinger Bands on 15-minute did not accelerate sharply. They widened, then stabilized. Expansion slowed. The interaction near the 120MA on the lower time frame mirrors the hourly friction. Price approached that zone incrementally rather than impulsively. Candle bodies remained moderate in size. Wicks extended but did not dominate. Acceptance attempts occurred. Persistence was limited. The RSI on 15-minute has shifted into a higher regime compared to earlier Asia compression. Momentum density increased as price climbed toward the overlapping moving averages. Yet, slope flattened near resistance interaction. Acceleration paused. Energy redistributed. Within the hourly boundary, this lower time frame expansion functions as negotiation rather than relocation. The February 11th New York session memory still contains the entire movement. No structural disengagement has formed from that box. Instead, each upward push tests the upper internal boundary of the February 18th New York anchor. Testing is visible. Continuation is restrained. The four Bollinger Bands on 15-minute briefly expanded during the upward drift. Then contraction resumed. Bandwidth narrowed again as candles compressed beneath the upper hourly reference. This contraction repeated over multiple 15-minute intervals. Compression dominated for several rotations. Volatility thinned. When compression repeats, it signals duration building inside containment. Not weakness. Not strength. Duration. Distance from the hourly 20MA remains limited even as the lower time frame fluctuates. The structural weight of the overlapping 20MA and 120MA on 1H compresses lower timeframe volatility. This creates visible hesitation. Micro-expansion meets macro friction. As long as the 15-minute structure remains inside the February 11th hourly box, lower timeframe fluctuation cannot be interpreted as structural relocation. It is internal processing. Oscillation between anchors continues. Compression reasserts. Interaction persists without extension. Hourly slope remains shallow while lower timeframe behavior cycles through expansion and contraction. The 20 moving average on the 1-hour chart has transitioned from downward slope into flattening behavior. Flattening indicates equilibrium attempts. It does not indicate relocation. Distance between price and the 20MA has narrowed compared to earlier sessions. Engagement is closer. Separation has reduced. The 120MA, previously slightly breached during February 16th and 17 interaction, now sits marginally above current price. This positioning restores structural overhead pressure. Even minor upward movement must negotiate that reference. Overlap between the 20MA and 120MA during prior sessions intensified compression. Now slight separation reintroduces layered tension. Weight remains present. On the 1-hour 20 Bollinger Bands, the prior mild expansion has transitioned into renewed narrowing. Upper and lower bands curve inward. Volatility contracts inside the February 11th memory box. Repeated narrowing across several candles confirms compression dominance. No sustained widening persists. Duration accumulates. The four Bollinger Bands mirror this contraction cycle more aggressively. Short bursts of expansion appear, then compress rapidly. These cycles repeat across multiple hourly rotations. Energy attempts are short-lived. Continuation fails to sustain. Containment prevails. On the 15-minute time frame, similar band behavior unfolds at a faster rhythm. Expansion phases last briefly before contraction reasserts. Upper band tests occur beneath the hourly 120MA region. Each test reduces momentum slightly. RSI remains elevated relative to prior lows, yet does not accelerate into extreme density. Slope stabilizes. Overlap duration between the 20MA and price on both time frames increases. Price is spending more time near these averages rather than far from them. Extended proximity reduces volatility amplitude. Movement compresses toward equilibrium. Inside that compression, micro-expansions appear and fade. Processing continues. The February 11th New York session boundary remains the dominant containment structure. Every hourly fluctuation still references that memory. Every 15-minute expansion resolves before disengaging from it. Structural weight remains intact. Engagement persists near overlapping averages. Volatility continues redistributing inside session-defined containment.